task 3 of the assessment. So this one again is worth 24 marks, so it's quite a big question. Okay, so it says here this task is about producing, adjusting, checking and extending the trial balance. Really important. Okay, it's what we do in real life, so we need to make sure we've got a good understanding. It says this task contains parts A to D. So what we're going to do is we're going to complete the following statement about classification of accounts for A.1. So rent received is, and then you've got to choose from the drop down menu. Okay, well, rent received is money that we're gaining. Okay, so it's something coming into the business. Okay, it can't be a non-current assets. Okay, because that's motor vehicle, land, etc. Current assets are your inventory, your bank account if it's positive, petty cash, trade receivables. Non-current liability is items that you owe over a long period of time, such as a long period bank loan. Current liabilities are items that you owe in the near future, so things like your trade receivables, HMRC, etc. Part of equity, well, it's not part of capital because we've not put the money into the business. It's not an expense because an expense would be rent paid, so it's got to be income. Okay. Loss on disposal of a non-current asset. So as we've just seen in the previous task, if we lose money on an asset, it debits in the statement of P&L. So it actually becomes an expense to the business because we're going to claim it against tax. It reduces the profit for the year. Okay, so again, straightforward, 2 marks. Certain errors will be disclosed by the trial balance. Okay, so remember that an error that is disclosed in the trial balance would mean that the general ledger accounts don't balance. So if you've posted something to a payment, say to credit your bank account, but you've not posted it to the expense account, the accounts won't balance. Okay. So it says an invoice which is completely omitted from the accounts, something be disclosed. Well, if it's been omitted completely, okay, it will not be disclosed because it's not in there. Okay, we've not posted anything, so it won't cause a problem in the trial balance. It won't, chuck out the debit or credit balance. Entries made with regards to an invoice for £100 for parcel deliveries are completely reversed. So that means what you should have debited, you credited, and what you should have credited, you debited. Again, this wouldn't affect the trial balance because all you've done is you've entered the correct amounts in both accounts. You've just reversed the error. Okay, so you've reversed the entry which has caused the error. A bank payment is made for cleaning supplies. The correct figure is entered into the bank. So that's important. The correct figure has been entered into the bank, but no other entries are made. So if it's been credited into the bank and no other entries have been made, then the error will be disclosed because the accounts don't balance. Okay, so all you've done is you've entered the credit, which means that the debit doesn't balance, which means that we would have opened a suspense account to get it to balance until we found the error. The figures on the purchase invoice for inventory are illegible and the wrong figure is entered into the ledger accounts. This error will or will not. So if it's a figure that has been carried through and it's what we called an error of original entry, so that figure's been carried through the accounts, it will not be disclosed because we've entered the wrong figure from the start when entering in the invoice or whatever, and it's been taken through the accounts, so it will not be disclosed in the trial balance. Okay, so again, with things like that, it's 4 marks. Just take your time and just pull it to bits and really think about it, because they are 4 easy marks to achieve. The next one then, we've got Arun has received his bank statement and has asked you to complete a bank reconciliation. The balance on the bank statement shows £30.76 overdrawn. The cash book currently shows a debit balance of £34.24. So that means the bank is overdrawn, but the cash book is positive. Okay, so think about that while you're going through these. It says bank charges of 50 appear on the bank statement. A bank transfer of 150 has been received from Jack Limited. It appears on the bank statement, but not yet in the cash book. A cheque for 250 from T.S. Martin, which Arun has paid into the bank and recorded in the cash book, has not yet been recorded on the bank statement. Arun has paid a cheque for £85 to Rosie's Flowers. This has not yet been recorded in the bank statement. Okay, so remember through your studies we talk about timing differences of the bank. So this means that you've put money into the bank or you've sent a cheque and it's not cleared the bank statement. It's not gone through the bank yet to appear on the bank statement, but it's in the cash book. That's the timing difference. Okay? So if you know it's in the cash book, but it's just not gone through the bank yet, that's why there's a difference from your bank statement to your cash book. Okay? So it says here, balances per bank statement. Well, your bank statement is overdrawn. Okay, so you've got £30.76. Yeah, and it does say here, show any overdraft as negative. Okay, so because it's negative, what we need to do is we need to either add something positive to it. Okay, so for instance, we've got a cheque of 250 from T.S. Martin, which has been paid into the bank and recorded in the cash book, but it's not come through the bank statement yet. So this is a timing difference. We've put £250 into the bank, okay, but it's not cleared the bank yet. So it's what we call an uncleared lodgement, okay, and that's for T.S. Martin, okay. We don't need to worry about these that have already been in the cash, entered into the cash book. Okay, we need to worry about the we need to worry about the ones that are in the cash book that have not gone through the bank statement. So, for instance, the bank charges are on the bank statement, so we don't have to worry because we're doing a bank reconciliation. Okay, so then it says we've got. Okay then, so now what we need to do is we need to deduct the amount that has been paid out of the business, but it's not yet gone through the bank statement, okay? So we've got a cheque here for £85 to Rosie's Flowers. It's not been recorded on the bank statement yet because it's a timing difference, okay? So we've got Rosie's Flowers and we've got £85. Okay, so then if you do your calculation of minus 30.76, okay, add on the positive balance 250 less the cheque of 85 gives you a cash book balance of 134.24. Okay, and as you can see, that is opening bank statement, add on the cheque, take off the outstanding cheque, so adding on the cheque that we've received and paid into bank, taking off the cheque we've paid out, gives us a balance as per cash book of 134.24. Okay then, so moving on to task C. Okay, so we're now going to do task 3C. So it says the trial balance has been produced at the 31st of March. The debit balance is 71652. The credit balance is 71602. So there's a difference of £50 on the credit side, which would be entered into a suspense account. Okay, so to get it to balance, we need to open a suspense account on the credit side for £50. Okay. Then it says prepare the entries to correct the following errors using the blank journal below. Narratives are not required, so that's fine. Okay, so but don't forget your account names required. Prepare the entries. So the closing balance of inventory has been omitted in the accounts. Its value is 2,870. So if it means it's been omitted, we've not entered it in at all. Okay, your closing balance of inventory, remember you've always got a debit and a credit. Okay, so you've got 2870 and you've got 2870. Okay, debit and credit. So you've got to remember now, where do they go? Well, we know that the statement of financial position is an asset because that's your inventory, that's your current asset. Okay, so we're putting it into the statement of financial position and we're taking it out of the statement of profit and loss. Okay, so I always remember is it going into the statement of financial position because it's a current asset, and it's coming out of the P&L because it's closing inventory and we're transferring it. Okay, then it says Haroon has decided to use some of his savings to expand the business. He's paid a personal cheque into business bank account for 2,500. This has been posted to the correct accounts, but the incorrect side of each account. So what's happened is instead of debiting the bank account, he's credited it, and then instead of crediting the capital account, is debited it. So what we need to do to rectify this is we need to double up on the amount. Okay, so the first thing to do is get your figures in, because you've got to double it up, and then we can deal with the account. So it says that he wanted to put it into the bank account, okay, which would have been a debit, but he originally credited it. So what we're going to do is we're now going to put it into the bank account, and by putting 5,000, it means that we've taken out the error and we've put in the correct entry. Okay, the credit entry then should have been to capital. Okay, so by doubling it up, we've taken out the error and we've now put in the correct entry. Okay. The payment of £50 rent has been correctly entered into the bank, but it's been omitted from the relevant expense account. Okay, so it means that it's gone into the bank, but nothing else happened to it. Okay, so it were correctly entered in the bank, but the debit entry for the expense account wasn't done. So it's caused an imbalance, which means we've got to have debited a suspense account. Okay, so to correct it, what we need is we need a rent account. Oops. Where's it gone? Rent. Yep. Which is an expense, so that's going to be a debit of 50, and then we're going to credit the suspense account to get rid of that original entry that we had to make the accounts balance. Okay, the total gross column of the purchaser's returns daybook has been overcast by 100. So the total of a purchase returns daybook is posted to the payables ledger control account. Okay, so if the purchases is a debit and the VAT on purchases is a debit, purchase returns is a credit, VAT is a credit, so the purchase ledger control account would have been a debit. Okay, so if we've overstated it by 100, it means that we need to credit the purchase ledger control account or the payables ledger control account. Yeah, and we need to debit the suspense account because it's caused an imbalance by us overcasting. Okay, so now if you total up your debits and your credits and look at the difference, yeah, it will have corrected the suspense account, which should now be at 0. Okay. Alright, the final task, is it on this one? Yeah, the final task is the extended trial balance. Okay, so basically what it's saying is ensure you calculate the P&L, profit or loss, and specifying the appropriate squares in the first column, whether it's a profit or a loss. So basically what it's doing is it's asking you to enter these transactions, okay? And then you're going to decide whether it's a profit or loss and what the figure is going to be. Okay, so opening inventory, yeah, is always in the statement of profit and loss, okay? And it's a debit entry because that's what we start with. It's an asset. It's an asset that we actually start with. Okay. Then we move down to closing inventory. Well, you should know with this one that you've always got a debit and a credit balance. So, and if it's like this in exam, they're always side by side. So you've got a credit of 254.20, which should have been your P&L, and the debit of 254.20, which is in your statement of financial position because it's an asset. We've got a loss on disposal of a non-current asset. Well, if you think back to what you've already done, a loss is a debit, it's an expense in the P&L, okay? So we've got £200 in the profit and loss. And then what it's asking you to do is work out whether it's a profit or a loss and what the figure is. Okay, so you can see here that these figures, this one and this one, and your statement of financial positions don't balance. Okay, so what you've got to do is you've got to make sure that the figure that you're going to put in your P&L and the figure you're going to put in the statement of financial position are going to be the same figures that will make it balance. Okay, so what we're actually looking for is 27190. Okay, so that should equal that then. Yeah, and then 27190 in the statement of financial position. Okay, so you can see now all the bottom columns now equal each other. So you've got your statement of financial position, your P&L, your adjustment, your trial balance. Okay, and because it's on the debit side, yeah, it means that we would transfer it then because it's a positive balance, yeah, and it's being credited in the statement of financial position, yeah. This would mean that it's a profit for the year. Okay, so it's a profit because we've credited the statement of financial position. If it was a credit in the P&L and a debit in the statement of financial position, it would have been a loss, would have been losing money. Okay, so that is basically task 4 in a nutshell. So it's not difficult if you take it step by step and you don't panic and you read the questions carefully. But again, task 3 worth 24 marks.